All right, guys, welcome to the forecast. Um, for next week. Today's Sunday, 26th, March 27th, birthday of my sister. So let's go about it. Let's start on the DXY. What happened? So on the daily, we broke above here and we came back into the deep discount of this area. And actually, well, we broke above here on the DXY. We didn't broke below here on the euro, so we might still get see that move coming true. Another thing we can expect is the DXY now following the structure. So bearish, bullish break, low, higher high, potential then higher low, and then continuation up. If we go down, you can see that we had this bearish internal range. Let me see if I have any dots on there. So no dots, okay. So high, low, return to the fair value gap, actually tap into this cluster of candles. If we go to the 1 hour, we can clearly see, yeah. So this cluster of candles, I do that on purpose, take all the candles, because it's not really that the move came from just this candle, it came from this area rather than just one candle. Well, you could, oh, sorry. What we also could say is that we have this demand or the supply area took out this liquidity. So buy to sell move, then we tapped into that. We actually tapped into the 50% of that. And then price continued down. So that we can actually now, let's keep this on. I like this just for visual purposes. This internal range liquidity was taken. What can we see after we took that? Price turned around, grab this internal low or this internal high over here. So this area of liquidity that was taken, and we came up and we continued down. So we know that. Like DXY, I don't like to go into the lower time frames unless I'm in a trade, because then I want to see if my trade is has probability to play out or high probability play out. So then 4 hour fair value gap inside a 4 hour huge area of demand. Our sell to buy move, taking out this liquidity, taking out these lows, taking out a weekly POI as well. Then a bullish break. And price steps into the 1 hour order block over there, or 4 hour order block, which is like yeah. So this is like a small sell to buy move, aka 1 hour demand over here, but we just stick with this. Then we can see our 1 hour shift of market structure, aka bullish break over here. We got this high that led to a low. We can see this impulse down. I think this was on the back of news. I'm not quite sure, to be fair, but it looks like it. I'll have to look back. So we can see that we broke above there. If it was on the back of news, it would make sense because this is where liquidity sits, and the liquidity actually sits above these highs. That's like a given almost. So there you go. The liquidity is taken, our price turning around, and we can actually see a discount for longs. Now, where do we want to see those longs from coming from? Let me remove this. So I'm gonna do a chart cleanup while doing this breakdown. So this was from those trades. I was targeting this fair value gap. Let me show you. This actually, see, we had this gap here, and I was targeting that for my trade, and what we can actually see price steps into that and then turns around, and that's where my long trade came from, or my short trade. I think it was over here. Yeah, over here. So we can see that I had to kind of guess it, but price reached into that 4-hour fair value gap, so I was like expecting a London swing to be formed here after taking out these lows. So previous daily low, Asia low being taken, then turnaround. So on the day DXY, I was expecting London swing to be formed here. And this was my target then, the new daily open gap, as it's called. Because it's the gap between the old day and the new day, something like that, or actually Asia open gap, whatever you want to call it. And knowing that I wanted to see that swing low on DXY, I wanted to see that swing high on EU, and therefore I was playing the minor breaks and got to see the turnaround. That was my trade, my last trade, where I said we could swing it, and look where it is right now. So I will clean this up later. If you hear any scratching sounds, I have like some allergic reaction to food. I don't know which food. And my whole skin is itching like crazy. So yeah. But now we got that shift over here, so we broke above this one. This one. Bullish break. Ooh, I don't like this. Let me zoom out and let me clean it up. There you go. So we got that bullish break. Now, where can we look for longs then? AKA shorts on the EU, but we will stick with the DXY for now because this is actually good. I'm doing this. So I have to improve my DXY analysis. So we got this decisional. Actually, this is already outside of that, but we get this area. And this is a 1 hour demand. 1 hour demand. Now I want to go lower real quick. Yeah, so we got a low, a high, a higher low, a higher high. So this low can be seen as a liquidity sweep. And we actually got this area where we can look for longs from. And we can see that we have above that some liquidity. Same for this one. This was a low that led to a high. So that's for sweep. And this is another 1 hour demand area. This is the extreme one. So we can maybe say extreme. And actually, we have another one here, but we already got that move back down, and it was not the one that broke this structure. So I like these two for now. We can just keep in mind that yes, there is a 15-minute PY maybe down there, but actually, yeah, let's stick with this one. So, and we got the demand decisional. So we got X and demand DE and EX. Extreme one and the one that actually this should be the extreme one. But yeah. So we can look for longs from these areas. And then we can target the overall highs. Because this is looking good as well. You can see that this is quite correctional. See, that's beautiful. Nice order flow being respected, order flow being respected. Order flow, well, over here it gets a bit wacky, but this is decent from this one. So we got 1 tap, 2 tap, 3 tap. Oops, I pressed space. So there you go. So, all right, let's make this one liquidity. That's being taken, turn around, and we can see our entry. All right. So now that we know and that we favor longs on the DXY, and we have reasons and we have a analysis behind it, we can actually hold up. Let me clean it up. Let's see. I don't use previous daily highs and lows on the DXY yet. Might use it in the future, not now, because I'm still new. So I'm trying to stick with the basics for now. Trend line equals those gaps, the high time frame. Don't need to go lower, as I said, because it's for overall bias forming. So we can actually see this continue down. We might also see it coming down, don't get me wrong, but I would love to see it coming up. Coming up means down on EU to this area over here. So let's now go into EU. So my forecast, by the way, let's make a DXY forecast. We took this liquidity, so I hope price trickles down. Maybe we get some short entries over here, aka long entries on EU. And then we continue up at least to this high. And then turn around, give us more. Want that high to be taken, give a fake turnaround, and then a continuation up. Another scenario is that we ignore the structure, we took some liquidity, maybe even hold this structure, we come up higher, respect something here, and then we get a turnaround and we continue deeper into the block. That's option B. So the red one is my most favorable option. And that's my bias as well, so to say. So that's what I'm aiming to trade for. So I'm gonna follow trades that, or take trades that follow this bias. And then another option is that we just smash down instantly. So these are 3 options. I don't want to like, let's see, hold up. Yeah, it's too far away. Like, I want to say like, and after that we could see this and that happening, but I don't need to know what's gonna happen then, because price will form in more detail and with more information in the future, meaning I can make more how do you say that? More correct decisions, more informative decision. I don't know the word, but I have more data, so I can base my future decisions on more data, aka higher possibility. So I don't need to carry or don't need to care about what happens after this high is being taken. I expect then a turnaround, maybe some internal range liquidity sweep if you don't form internal range liquidity. If you form internal range liquidity, if you don't form internal range liquidity, you might even come up here, then break down below this low and then continue up. Because if there's no internal range liquidity, we'll go like this, then take out that low and then continue up. If up, if it goes up, if it goes down and just breaks below this, then this all is wrong. But for now, it looks like this is about to play out. So we form a bias based on what's most likely to happen next. But yeah, so that's that. I hope this is clear. Now we have like 4 biases and 3 on the most recent, and this might be happening over the long time. If you do form internal range liquidity, I see price forming like this. If you don't form internal range liquidity, I see price doing like this, taking out this low, and then this low, and then coming up. I am a lost boy from the land. Okay. Oh man, my literally my whole skin is fucked up because I scratched everything. But all right. Um, 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 let's clean this up, actually. That's what I'm looking forward to. Now I gotta see one thing. Uh, Let me, 1 second, let me send a screenshot actually to someone. This is my forecast for DXY. Most red is my highest probability scenario. And my bias for the first few days slash week ahead. One second. I need to ask another question. Does the decisional so yeah, all right. So let's go into EU now. Now we have we formed a bias on DXY, which is shorts into longs, making our bias for EU longs into shorts. And if we clean up this mess, it's actually pretty clean, but let's just clean it up completely. So this can all go. This can go. This trade, the previous weekly high already got that marked out there. I still want to keep those on because it's really interesting to follow that. We can take, no, let's keep that on as well. Let's keep that on. Let's remove this. That one. Let's go to the 5 minute. There's probably more markings. Oh, it's actually pretty clean. Oh, this was because I did the recap there. It's nice to see that it got respected, but we don't need that. We don't need that. We don't need that anymore. We need this, but in the form of an arrow. There you go. Previous daily high taken, previous daily low taken. Internal range liquidity taken. This is a sweep. This was our first 1 hour demand area. We got more liquidity to the downside. I'll show my email. So we got that break. Actually, I want this one. Actually, hold up. Yeah, this one is cleaner. This is essentially the low that led to that high. Now that we know that, we can see some. All right, so this is good. This was our early sellers for that New York short. Low, high, higher low, higher high, bearish break, just about, followed by bullish break. So these were our early sellers, aka our liquidity sweep. We can say that this is our sweep, but to make it more clean, I will mark this out as liquidity and mark this out as our sweep. That makes sense. So all that liquidity gets swept internally. You see nice liquidity building up, and then we get the break of structure. So 50-minute wise, what would that look like? Like that. Let's go to 1 hour. Yeah, so perfect. Let's take it high. And that's my supply zone. So this is my 1 hour supply. What is this? Oh, 1 hour supply, and this is my extreme. And we got another area over here. Though it didn't take any liquidity, it took Asia highs. So that's a high that led to this low. bear structure being formed, bear structure being broken bullish, continuation down. So we got that sweep. Then additionally to that, we got this liquidity pool. Knowing that, we also know that we might come deeper into the extreme. And we can actually mark this out as our 50-minute demand. Let's see what the 1 hour looks like. Or supply. Let's take let's class it as a 1 hour supply. 1 hour supply. And this was the decisional one. And yep. We got actually this 1 hour low being taken, so we might actually have a 4 hour supply. Well, that's a bit tricky. A 1 hour supply from this low up to this high. But yeah, I would rather say we have a 4 hour fair value gap sitting over there. We can actually now, how do you say that? We can refine this. Sorry, I was looking for words, and we have a 50-minute fair value gap. 15 FEG. Sitting inside our 1 hour demand. So demand is just a two. It just rolls so good on in your mouth. Demand. Let me actually take the low up to this high. And then we got our 50% sitting in the middle of our supply zone. 50%. Let's actually move it to the right. Let's make it thick and let's make it red because we didn't get through there yet. Same for this one. There's a beautiful 50-minute POI. But what makes this a strong POI? So now we go back to our old rules and we can see that we have some bearish order flow being formed, some disruption of highs. So that might be a reason for price to take this and then continue down. So we have a 50-minute POI sitting inside there. 15 M. Now, where does this 1 hour block start? Yeah, which lines up with our, there's also a 1 hour demand block over there, or a POI. We got 1 hour for value gap sitting below that. Well, I like the 50-minute fair value gaps. Because it sits in the middle of that thingy, this zone. So yeah, that's pretty clean. That's pretty clean. We got our structure marked out. We know where we want to go. We got still some areas below here where we can look for longs. Now, seeing that, we might extend this to this one and call this a 1 hour demand. Actually, I like that 50-minute better. If I zoom out, let me see. Zoom in. Yeah, let's keep this one. So forecast wise, we got clean charts. Actually, no, we're not done yet. So we got our previous weekly high above here. previous weekly high, and we got a previous weekly low down here. And for the day, we have our previous daily high above here. And we have our previous daily low down here. Now going to the 5-minute. We're gonna clean it up. So this one over there. Oh shit. Over there. And this one that's quite tucked on over there. And the weekly one, where does it start? So there. And then the low. Down here. 50-minute. There we go. Sweep, turn around. All right. Trend line. And these are the areas we want to trade from. Now let me make it a little bit more tight. All right, all right, all right. That's annoying, but let's just keep it like this. So for our forecast wise, we got previous daily high above here. We got a previous daily low down here. We got a previous weekly low down here. Is that all right? I don't think that's correct, actually. Oh, wait, we didn't take the, huh? Oh, this is another one. This is a different one. But that's pretty clear that that's previous one. Actually, let's keep it on. Let's just keep it on. So we have in our trade direction and in our overall bias, we had that we wanted to see this low being taken. Instead, we took previous weekly highs, we took previous weekly lows, we took previous weekly highs. Actually, we did previous weekly high, then previous weekly low, previous weekly high, previous weekly low. Then we took previous weekly highs, tap into this 4-hour supply zone over here, taking out all the internal range liquidity, tap into 4-hour fair value gap, and we got this trend line building up. We got liquidity to the upside taken. We got this structure from this high down to this low that was formed in here, and then this was the turnaround. We have on the DXY, we want to see higher pricing, meaning that we want to see lower pricing on the euro. Short term, we want to see price retrace into these. We want to see DXY retrace lower, meaning that we want to see EU retracing into our decisional or extreme supply zones, and from there we might see price turn around. I favor this one. Why? Because then we take out previous daily highs and we take out this internal range liquidity for this bearish range. This is the area that took these highs and respected this high time frame area. Therefore, it feels like a stronger area to me to get a reaction from and a high probability trade. Although this one is valid, so we will look for shorts from this area. And then we can see price coming down lower. And in our trade direction is then, if we go to here, we have first a previous daily high being taken, meaning this liquidity pool and this high as a liquidity pool in itself being taken. So that's in our trade direction. And then we have a continuation down to take this low and this low, which is also two high liquidity pools, strong liquidity pools. So those are good magnets to target, to trade from, to trade above and below this. So forecast wise, ideally, I want to see this. Let me show you. Price retracing up. Maybe give a short trade from here. Then continue up. And then we get our entry continuation down. Might see like a turnaround over here. Respect that, continue down. Then we also respect this one. So yeah, this will be my ideal scenario. Then getting longs from this area into shorts from that area over here. And this is buy to sell move. And then continuation down, take out this trend line. Previous weekly low has been taken, second target, and then this will be like a meltdown, strong meltdown, because this is last trend line liquidity, and this is one previous weekly low, second previous weekly low. We want to see this taken with speed because everything is mitigated as well. So yeah, that's my forecast. Sorry that Euro took a little bit longer. I wanted to clean it up as well. So good luck this week. Peace out.